Welcome to StockStream's Education Series. This presentation is brought to you by StockStream Financial Services in collaboration with mystockstream.com. Today, we will look at pivot points. Trading inherently is risky and may not be suitable for all investors. Therefore, we recommend that you treat the contents of this presentation strictly as educational and informational in nature. Our goal at StockStream Education is to increase the awareness level of investors. We propose that you learn concepts of analysis using StockStream Education's training material. Then, follow StockStream experts at mystockstream.com to see the techniques you have learned being applied to live markets. Once you are comfortable with a particular technique, we recommend that you conduct your own analysis, get it reviewed by a StockStream expert, and then put it to trade in live markets. Pivot points are one of the oldest technical indicators and were conceived by pit traders even before the existence of electronic trading systems. Pivot points are price levels which act as support and resistance for a particular trading session. Pivot points are calculated using price data from the previous trading session and provides leading indicators of price action. The figure on the right shows the pivot points that are calculated for every trading session. The central pivot, marked as PP, determines the market bias for a particular trading session. If the market opens above the central pivot, it is assumed to be in an uptrend for the trading session, and vice versa. R1, R2, and R3 are the resistance levels to watch out for if the price moves higher. S1, S2, and S3 are support levels if the price moves lower. M0 to M5 are midpoints between the support and resistance levels. These levels act as intermediate support and resistance depending on their location above or below the central pivot. Continuation. In this case, the trading session open is consistent with the broader trend. For example, the session opens above the central pivot for a market in an uptrend. In this situation, we will look to buy tests of PP or M2. Stops can be placed below the lows formed before the reversal from PP or M2. If the price bounces from PP, the projected target is R2. On the other hand, if we get a bounce from M2, the projected target is M4. Reversal. In this case, the trading session open is in contradiction to the broader market trend, i.e., the session opens below the central pivot when the broader market is in an uptrend. In this situation, we look to buy a reversal after a test of M1 or S2. The stops can be placed below the lows formed before the reversal from M1 or S2. If the price bounces from M1, the projected target is M3. On the other hand, if we get a bounce after a test of S2, the projected target is the central pivot. The figure on the right shows examples of both strategies 1 and 2. The broader market trend is up, so we will be looking for buying opportunities. B and C are examples of strategy 1. We can see that the market opens above the central pivot. The price then falls to test M2 in case of B and PP in case of C. A reversal from these levels provides a buying opportunity with stops below the lows. After the test of these levels, price bounces higher to reach our projected targets of M4 for B and R2 for C. A shows an example of strategy 2. In this case, the markets open below the central pivot within a broader uptrend. The price then falls lower to test M2, providing a good opportunity to buy. After a test of M2, the price bounces higher to reach our projected targets of PP. If you have any questions, visit mystockstream.com and contact us at StockStream Education. You can also contact any of our other experts covering Forex, commodity, or equity markets. We will be more than happy to answer any of your investment-related queries. Thanks for listening to this presentation and have a good day.